Today is Friday, October the 25th, and it was news from the China negotiating team that said that they were close to striking a phase one deal, and China offering to purchase $20 billion worth of soy and other grains that pushed the market up right at the beginning. I'm just skeptical. Even Zero Hedge, who is a diehard Republican conservative, says that it looks like we're going to accept the same deal that they offered us in 2017, remove the tariffs, and we'll buy more stuff, in which we get nothing. That would not make the market very happy. So let's just depend on the charts, and let's not trade around rumors. Advancers led decliners. Volume was particularly good for a Friday, and although we did pull back from the highs, and that was an important high that we pulled back from, we just finished off the day flat. All of this is good stuff. With advancers to decliners almost 2-to-1, that's going to definitely take the market oscillator to the overbought line. That means that we're overbought and we never stay there for very long. Look at this. Look at this. Look at this. Look at this. Now you could say, look at this. Yes, we did exceed it in January, but that was after this huge drop and lack of confidence in the market, where we went way beyond oversold and just went back to way beyond overbought, sort of equal and opposite reactions. And here's one also where we spent 4 days or three days above this line. But historically, money tends to pull back out of the market when it reaches this type of a divergence between the two moving averages that form the McClellan oscillator. So then let's look at what else happened, and we'll look at the charts. Where did we end up today? Forget about this. Where did we end up today? Exactly at the top. The Chiku span exactly at the top of the candle of September the 19th. And where was it yesterday? Just a little bit above the previous day candle. Where was it here? Just a little bit below the close of that candle. Here, it was right on the bottom of that candle. Let's take a look. Right there, right at the bottom. And here it was also resistance. Resistance, support, hold, support, support. But we pulled back from this point, and that point represents what? A return to the previous high back in July. So now the market's had a double top. And what happens when you have double tops? It takes a lot of strength and several attempts to push back through that double top. And we always would come back and retest the double top to make sure that the market is on firm footing and wants to continue to move in that direction. So what's more likely to happen here with the McClellan oscillator being overbought and just finishing on top of this candle? What's to say that next week we don't start Monday by finishing on top of this candle? And then, of course, moving down to this candle, into this area. This is what I said yesterday, that I believed once we passed this peak, we were going to be on a slope where these candles would be used as support when we come back, possibly to test the 8 EMA, which will be, out here somewhere next week. So modest pullback on Monday is what I'm expecting. Now we have some big earnings next week. We have AT&T reporting before the bell. We have Google reporting after the bell. We have Apple on Wednesday, and we have Exxon on Friday. And that pretty much sums up the 3 to 4 weeks of earnings releases. And then the market will say, wow, that was really good. I wonder what they're going to do for the fourth quarter. And is the consumer going to be there to help them? Because the consumer right now looks like he's spent too much. We're at record high consumer debt levels. Canada is as well. It's not just here. And the Canadian consumer is pulling back. Will the American consumer follow? Apple. Wow. up to 114.6%, that Fibonacci level. With earnings on Wednesday, let's see how important that Fibonacci level continues to be. But this is a very good stock. My short puts are getting to the point now where they are so deep into the money that their delta is so small that when we had this $3 rise, I only had an increase of, my deltas are like 25. So for every dollar it went up, 100 shares went up $75 for me. So that wasn't, no, that's not true. All of my holdings went up $75. So that's not all that good. So but I'm waiting to sell next week's puts, which are going to be rich in volatility. And I'll explain that to you better on Monday or Tuesday. And I'm going to do that probably Wednesday morning, when volatility for Apple is going to be the highest, and there's going to be a lot of juice in the calls and puts. AT&T just up 5 cents, but it managed to hold on to the 50 moving average. I sold 37.5 calls on the 1,000 shares that I have. They are juiced up on volatility, and their earnings are Monday morning before the bell, so I'll know that before I talk to you next. Look at where the Chiku span is, just below the candles. So if it does have a good day and it has good earnings, it's going to be restrained at 37.52 by the 8 EMA, and it's going to be restrained by this candle, which is 37.15. So they're both essentially the same, and 37.15 was also the high today from which we pulled back. So all of those coincidences tell me that AT&T is now going up to that point. That arrow that I had before was what I had predicted way back in mid-September, that AT&T looked like it was coming back for a test of the cloud, and then once the cloud and the 50 became coincidental, then it was just a matter of time before it came down. And look when that happened. It happened right here when the cloud and the 50s, two of the 50 moving averages, met. And what happened? We immediately got sucked down into that black hole. Just too tempting for traders to say, let's sell and let's see if there's momentum to buy back again. So they took their profits up here at 38.23 and are starting to buy back now at 36.87. But with earnings coming up on Monday, it's understandable that we didn't have very big volume today, but volume nonetheless. Whirlpool down $1.17. It continues to struggle. I think that it might just be a little bit overbought. That snap reaction, quick knee-jerk reaction from Whirlpool's calling the upcoming quarter as going to be less for them than the current quarter means they think that the housing market is going to pull back, the new housing market, and the consumer is going to pull back on those kind of purchases. Of course, GDX up 22 cents. Look what happened here. We said we said back here that we were going to move up if the dollar got weaker, and we were going to seek to break through at this area of weakness. And that does look like what's happening. The cloud and the 50 SMA intersected here. So of course that was an attractive point. And then people sold because there was two events there. The 50, where people would automatically set a sell if they had purchased down here, and the top of the cloud. So Ichimoku traders are, of course, selling. So this theory of wanting to break through here still seems to be valid. The Chiku span also stopped on the 50 and the bottom of this candle. Again, no coincidence. Ichimoku traders are looking for coincidences of moving averages and candle formations, 26 candle periods back. The big news, of course, was Amazon. And Amazon was down over $100 last night. And look at how it roared back today to end the day at down $20. That's just a normal day for Amazon type of volatility. We've seen that kind of motion before. And this was a tremendous amount of strength for Amazon. The market now feels that Amazon is investing in itself. That's what it does best, and no one's really freaked out about their Christmas sales. So we need to be looking at this pack of moving averages and the cloud. This stock is still moving up. There's no question about it, and that's where it's headed to. But it might not be until it gets to a thinner portion of the cloud. It might not even be till down here. So for the time being, let's just say this is what we're predicting. Now Google, who have the earnings after the market close on Monday, nice little spike here. Let's take a look on the weekly and see if the cloud tells us anything. The Chiku span finished below the highest point of the weekly movement 26 weeks ago. In order to finish above next week, it needs to finish above 1281.08. So that's going to be the target next week for where the Chiku span is on good earnings. So let's put that there, and let's just say that visibility is for the 1 week chart only. So that is what we're looking at for Google. Let's just take a look at one more, Walmart. Just a series of indecision dojis, but nonetheless, they're still at 119. You remember that I had bought some 115 vertical calls, 115, 117, and then I got out of it when we started this fall, this drop here, and I ended up losing $100. My maximum loss would have been $500. Guess I should have held on. They would have matured. They would have been fairly profitable right now. But I wasn't in the mood to lose any money, and I'm still not. When the market is at its top, like it is, like this, I am cautious. Now I did take my 133 Caterpillar calls, which had capped my earnings on Caterpillar at 135.26, and I rolled them into next week. Why? Look where Caterpillar stopped. It stopped at the gap. A gap from where? From way back here on April of 2019. So that gap we've been looking at since April, and it proved to be where we had resistance. I do believe now that Caterpillar is going to pull back. So I have these short 133 calls for, I believe, 2 weeks out. So I'm giving Caterpillar a couple of weeks just to bring in a bit more premium for me. And if it drops back to 133, I would be a happy boy. So that is the summary today. I think that the Ichimoku and the clouds were visibly important this week.